Welcome back. Now, Africa's biggest mobile phone operator, MTN, says its Nigeria unit is on track to list on the Nigerian Stock Exchange in 2017 as part of an agreement with the federal government. MTN had said in June its local unit will list on the NSE after agreeing to pay a reduced fine of $1.7 billion in a settlement with the Nigerian government of a long-running dispute over unregistered SIM cards. MTN Nigeria aims for the listing to take place during 2017, subject to market conditions. MTN is the largest mobile phone operator in Nigeria with 57 million subscribers, and the country accounts for about a third of its revenue. Well, Nigeria is said to have lost about 356.6 billion naira in the 5 months owing to the shutdown of Forcado's oil export line. In February, Shell declared force majeure on the facility after militants blew up a pipeline feeding the Forcado's export terminal, knocking out at least 250,000 barrels per day. Now let's talk to a research analyst at Financial Derivatives, Desola Sumoni, to put these into perspective for us. Good afternoon, Desola.
Good afternoon, Balaji.
This is Chimezie Desola.
Forgive me, Chimezie.
Right. The shutdown of Forcado's oil facility has not only led Nigeria losing huge money. Companies such as Seplat, Shell, and even Total are reporting losses. What is the way out for these companies and, of course, the country?
Thank you for that question. I think the first things first is for the government to. The government already started having negotiations with MEND to understand why the NDA are bombing the pipelines, and so that we can reach because with the look of things, it seems that the militants are going to keep keep bombing the pipelines, and this is going to have significant revenue consequences for Nigeria and even investment consequences for Nigeria. So I think the way out is to negotiate, and rumors and reports have it that the ND has been, let's say, elusive to negotiations. We've not had anything we've not had any reports that the government is having any negotiation with the NDA. But we believe that with men on board now, it will bring also other fringe militant groups on board.
Now, the federal government expects oil output to move to 2.2 million barrels per day in 2017, 2.3 million in 2018, and 2.4 in 2019. And this is despite the hostilities in the Niger Delta region. How achievable is this?
I think the estimates are vastly ambitious because, I mean, last year the budget estimate was about 2.28 million barrels per day. This year is about 2.2, but we've not yet, our production did not reach that level. For last year, the highest production level we had was about 1.9 million barrels per day, and the last time we've come close to the estimate was in 2014, around August 2014, where the production was about 2 million barrels per day. So I think the budget production estimate is quite ambitious, and I don't see how we are going to achieve that.
Now, even the oil benchmark for 2017 is being projected at $42.5 per barrel. Is that also ambitious?
That is a little more realistic because, I mean, in line with analyst expectations, we expect, and most analysts expect that next year the average price will be about $50 per barrel. I mean, the U.S. Energy Agency expects and forecasts $50 per day for oil price, and another group, the Goldman Sachs, also forecasts that oil price for 2017 will be about $45 to $50 per barrel. So I think the oil price estimate is okay, it's reasonable, but for the production, I think it's overly ambitious.
Now, with the current forex crisis we're experiencing here in Nigeria, what is the outlook for Nigerian oil sector?
Thank you again for that question. Well, for the production and price area, I think until there's some form of sanity in the Niger Delta region, these oil companies will continue to report losses. this year. And for the forex challenge, I think also that until we have some form of inflows, they will still be reporting losses. But for now, we are still watching the market to see what the reaction will be to this CBN new policy.
All right, thank you very much for your time, Desola.
Thank you.
Desola Simoni, research analyst at Financial Derivatives Company. And what is the Naira-dollar behavior today at the interbank market? I'm being joined by a forex dealer at FSDH Merchant Bank, Collins Akenemehen. Good afternoon, Collins.
Good afternoon.
Now, the Naira depreciated further on Wednesday. That's after the CBN's rate decisions, closing at 330 Naira to the dollar. Was this expected? I remember the CBN had mentioned that the decisions they took would actually help the Naira to appreciate. So why are we seeing things the other way around?
Yes, this was not what was expected. However, what happened was a consequence of illiquidity of FX in the interbank market. What has happened is the CBN has not been intervening as frequently as it did in the days following the introduction of the new FX policy. So even at that, CBN net over about $699 million worth of 1 month FX forwards on the 22nd of July. However, oil export proceeds that hitherto were supplied to the interbank market are now being sold to the downstream players in the oil sector. With respect to the policies that CBN introduced on Tuesday by hiking interest rates, it's expected that foreign investors will take a cue from that and begin to bring in their capital with a new reduced negative rate of return.
Now, with what we have seen so far, I mean, yesterday 330, what should we be expecting by the time market closes today? That's by 2 p.m. What figure are we likely going to see today?
Can't figure is anyone's guess, but it shouldn't be too far from what we saw yesterday because not much inflow came into the market at all today.
All right, thank you very much for your time, Collins. Collins Akenemehen, that's forex dealer at FSDH Merchant Bank. We move on now to Algeria. OPEC member Algeria says it will launch a new economic growth model for the next 4 years, focused on reforming the tax system to bring in more revenue and reduce dependence on energy exports. The plan is part of long-awaited moves to diversify the North African economy away from oil and gas, which account for 95% of export revenues and 60% of the state budget. A sharp drop in global crude oil prices has pushed the government to cut spending for 2016 by 9% and plan further cuts over the next few years. That measure is expected to help cover, by the end of 2019, operating expenditures as well as irreducible expenditures for public infrastructure. And South Africa's central bank says the country will avoid a recession this year, with a recovery in areas like mining and manufacturing likely to lift growth in the last 3 quarters. Growth in the continent's most industrialized economy contracted 1.2% in the first quarter of the mining, as the mining, manufacturing and agricultural sectors retreated sharply. Last week, the South African Reserve Bank kept its benchmark interest rate on hold, saying a weak economy had persuaded it to pause a hiking cycle. Manufacturing output rose more than expected in May, while mining contracted at a slower rate in the same month. Well, we'll take a quick break now. When we return, we'll see what's happening at the fixed income market. To stay with us.